the session. Moving on to Nigeria, the market was down. It has been trading within a narrow range, like I mentioned, for most of the markets. Indeed, that has been the case. The NSE All Share Index fell 0.2% to 36,403 points. For the week, the ASI managed to post a 0.43% gain. The fall on Friday was linked to losses recorded by companies like Unilever, Dangote Cement, Zenith Bank, Stanbic IBTC Holdings, and Lafarge Wapco. The total value traded also dropped by 30% to 2.8 billion naira, as many investors sit on the sidelines ahead of the US Fed meeting later this month, while others turn to the fixed income market in search of attractive yields. And to get the latest on the news driving the markets, we have Adegboyega Olatunde, head of equity dealing at Primera Africa, to join, giving us some perspective. Thank you so much, Boyega. So, your thoughts on where we are right now as a market? Like I mentioned, it is a case of the market trading within a range, a lot of caution ahead of the US Fed meeting, and now we're seeing fixed income yields being relatively attractive. Yeah. Where do you think the market is likely to go from here?
I think it's actually going to trade flat for this quarter. I had previously said that market tends to either trade flat or be negative for the third quarter of the year. Historically, it's always either flat or negative.
Right.
Now, there are two things that have basically impacted our market as we speak. From the foreign portfolio investor end, it's the impact of the Fed meeting. Yields have gone up in foreign markets, so foreign markets are more attractive. Now, from a foreign investor perspective, you're looking at it and you're thinking, as yields are more attractive, I don't have the translation risk, I don't have the political risks by investing in Nigeria. So for them, it's a case of, would I still want to be invested in Nigeria for now or emerging markets for now? I'm not too sure. So they would sit on the sidelines.
Yeah.
Now, from a local perspective, you can look at it and say that who are the largest buyers or largest purchasers in the equities market? And that would be your institutional PFAs, your institutional clients or your PFAs.
What are they doing right now?
Now, the PFAs are basically on the sidelines and are more akin to buying.
Going for yields?
For yes.
Right.
Yeah. So,
or is there anything out there that you think is making, especially the local institutional investors, a little more cautious? Because when you look at valuations, a lot of people continue to point to the banks being fairly valued, relatively cheap, in fact. So your thoughts on why the PFAs are on the sidelines right now?
Well, I basically think it's a case of managing volatility. At this point, the key thing as a PFA that I'd be looking at is safety rather than return. So for them, I would look at it and say that if they had invested in the equities market previously, they would have locked in certain gains. So right now, it's a case of let me keep what I have. So we have fixed income yields that are fairly high at the moment. So at this point, I'd actually want to lock in those yields.
Right.
No, if you know that's not going to last forever. Okay,
let's talk a bit about some of the news flow last week. I think the big one was the GDP number that was out on Friday, 6.18%. I understand it's the lowest quarterly figure since 2009. So something to get worried about if you're looking at growth in this market. Is this something you think that is likely to weigh on the market going forward?
Not necessarily so. What I believe, the key factors that I believe that influence our market in terms of regulation would be, one, inflation numbers, and inflation numbers vis-a-vis what the MPR is. Now, MPR is likely still going to remain at 12%, I believe, until Sanusi's departure, because CRR obviously has been increased and liquidity is a bit tighter. Now, inflation numbers have also been fairly stable. Because inflation numbers have been fairly stable, they've been less than 10% since the beginning of the year. I'm of the opinion GDR would not significantly impact it as much as inflation numbers or the MPR would. Those ones have direct consequences on what we see. GDR numbers, not so much so.
Right. You mentioned Sanusi's departure. Of course, we know he's gone in about 8 months. He has already said he's not seeking a second term, so we're going to get a new central bank governor. What about that point, especially for the foreign investors? A lot of people may suggest that they've liked the Sanusi tenure. It's a bit predictable. You know his priorities, defending the Naira, etc. We're now going into a season of uncertainty. How big a factor do you think this is likely to be over the next few months?
I think it's extremely important. I think it should be a very, very big factor, considering the fact that we're also, next year will most likely be a year before elections. So the key thing you basically want, we generally know that our markets tend to trade basically sideways because there's a lot of caution, basically when there's an election year, preceding an election year. Now, the key thing for Sanusi's successor is, and internationals view Nigeria as a market, is whether there's some type of continuity in what they've seen so far. Sanusi's policy thrust, major policy thrust, has been exchange rate stability, banking, financial sector stability, and exchange rate stability. But once you sorted out the financial sector stability, now he's also focused on exchange rate stability. Now, what I'm looking at as a foreign investor is largely exchange rate stability, making sure that when I invest, whatever my returns are, I'm not exposed to that translation risk, and I've eroded some of the gains I've made.
Right.
Now, Sanusi has done a fantastic job in ensuring that the Naira is relatively stable in exchange to the dollar, and to the point where he's actually even defended the Naira.
Right.
And a lot of the policies that we see coming from the CBN are based on some way, somehow ensuring that the Naira is defended without actually having to intervene.
Right. Yeah, I know it's highly unlikely, but do you think it's probably a good idea for the government to perhaps announce his successor early as opposed to late, as we would typically will expect that the announcement probably will be sometime March, April, so that he can get through the Senate, whoever it is will get through the National Assembly and be approved. So your thoughts about naming a successor, particularly given all the volatility we can anticipate in the world going into the next few months. Well, of course, we have Syria happening very soon. In the next few, who knows, maybe days or weeks, we'll see some attacks there. So your thoughts about that strategy for the government, naming a successor for Sanusi?
What I would say is, in terms of transparency, I believe the earlier the successor is named, the better. What it allows you to do, it allows you to remove your mindset from, oh, who is it likely going to be, and what are his thoughts on how we move this economy forward, to, oh, this is the person they have selected, now what would be his policy thrusts going forward. So the uncertainty of continuity as a factor has been removed. So the earlier the government actually announces it, the better.
Okay, let's move on back to the markets. The IPO market, a lot of people suggesting that it's likely to get back after, I think it's been a lull of about 5 years.
Yeah.
So your thoughts about what that could mean for the market? I've already confirmed from the executive director. I did speak of the NSE last week. I spoke with him, and he mentioned that yes, they have several applications, and perhaps we'll see an IPO before the end of the year.
Yeah. This is actually a good time for companies that want to raise capital, particularly if you're coming to the market for the first time. Now, there has been a renewed interest in our market for most of the year. So this is obviously a good time for companies. However, this particular quarter might not be so, simply because interest rates are high. Fixed income yields are high. So you're looking at it and you're thinking, so as much as I would want to invest in an IPO, on the downside I have interest rates being high and I can lock in rates.
But so, if you look at it, if you take the flip side of that argument, for the issuer, if interest rates are high, perhaps
he will come to equities. Equity long term is regarded as cheaper, so it makes more sense for the issuer.
Right. Well, we'll see how it plays out. Thank you so much. But final point, give me your stock picks going into this week. Which stocks do you like?
I would. UACN has always been a particular stock pick of mine. The company has metamorphosized from your typical conglomerate to more or less a holding company structure, where they own various business lines, various important business lines: food, paints, feed milling. So UAC is one. On the banking side, I would be looking at, based on current valuations, I'll be looking at Zenith. I'll probably be looking at FBN also. So those are.
What's your take on the cement companies? Dangote Cement.
The cement companies. Dangote Cement is the only company.
For you, or you think this is?
I think Dangote Cement is appropriately priced. There isn't substantial, coming from a peak of about an all-time high, intraday high of about 233. So there's still some upside on that end. Dangote Cement, WAPCO, yes.
All right, let's leave it there. Thank you so much for joining us.